and this isn't to scale, so all you engineers just, try not to focus on the fact that my scaling is now screwed up because I started my graph too far to the right, and I don't want to start over. But you get the point, okay? Demand is flatlined, and supply continues to move up. So, because supply is continuing to move up and demand is starting to flatline, what you will see is that supply will, by its very nature, start to flatten out as well. Because the manufacturers start to realize, oh man, people aren't buying as much. The MacX Beanie Baby is staying on the shelves now. Before it was a 0-day supply, meaning as soon as the things were on the shelves, they were gone. And now it's gone to a 14-day supply, where 90% of our outlets have a 14-day supply of MacX Beanie Babies. And then eventually what will happen is the supplier will start to drop off. Usually demand has already fallen off. So demand will fall off even faster than supply will fall off. And then the ideal situation would be they would both start to flatline again. Okay, so let me redraw this where we've got a little bit more room so it's a little bit clearer for you. Generally speaking, so this is supply, this is demand. So price, demand goes up in stages. It builds, increases, moves up, peaks, comes down, flatlines, and then typically will decline, and then you'll have the fall off. Supply is lagging. So supply will typically be higher than demand by its very nature. Then as the demand starts to increase, you'll see supply start to ramp up. Then you'll have the lag time here. So then eventually demand will come up. It'll peak, typically flatline. Now, for some suppliers, what you'll find is that supply will literally drop off like this. And that's where an item is discontinued. In the real world, though, what you'll typically find is that the supply will drop off as well, but you can see not as steep an angle. So demand is really falling off, but supply is still floating up there. So what the heck does this have to do with trading? Well, if you were paying attention, don't these kind of look like the moving average lines? Okay. Got the moving average lines right there. Now, I wouldn't go so far to say as one moving average is supply and the other is demand, but can you not see the same type of relationship? In other words, instead of looking at demand and supply, you could look at the green line being short term and the red line being longer term. Okay, so the short line, is moving along, starts to move up, moves up quickly, and dies off. So what does the longer term do, though? Well, the longer term is kind of floating along, and then it starts to move up. It peaks a little bit later, and then it starts to drop off. On this one chart, we can see that happening a couple of times at least. Actually, I've got it reversed. My apologies.